And now to a CNBC investigation. CNBC has learned that a popular financial app that promises high yield, fully insured savings accounts is having trouble processing withdrawals. At stake, millions of dollars in deposits by tens of thousands of customers, some of whom have not been able to access their money for months. Federal authorities are investigating, and so are CNBC and CNBC.com. Scott Cohn is live with the latest. Good morning, Scott.
Good morning, Joe. Yeah, we have been looking into this myself, CNBC.com's Lori Connish, and our investigative team. The company is called Beam Financial, and it sounded great when it launched last year. You deposit money into the app, and you could earn up to 7% annualized, fully insured on your savings, which, of course, is a lot better than what you would get at a bank, a traditional bank, which pays a fraction of 1%. The app got a lot of attention, including from CNBC when it came out, as a way to fight inflation, but with some significant risks, one of which, it turns out, is that none of this works if you can't get your money out.
I feel a little violated, and I feel pretty pissed off about it.
Steve Wolf, who owns a small marketing business outside San Diego, thought he was being smart. With a toddler at home and a new baby on the way, he wanted to set up a college fund in a safe place.
And at the time, it didn't really even feel like a risk.
Certainly not based on the ads online.
Meet Beam. Taking cost and greed out of the equation, Beam grows your cash by 2 to 4% a year.
Best of all, the money was supposed to be FDIC insured.
That FDIC logo gave you some peace of mind, didn't it?
Absolutely.
According to Beam's website, it worked with a network of big banks, paying above-market interest rates thanks to simple things like low overhead. It's an app with no physical branches. You could boost the rate even more by doing things like recruiting new members.
One thing that interested me about this was a fintech company that was U.S.-based.
He put his money in, up to the $15,000 maximum, and watched the interest pile up, until this summer when he says the app briefly stopped working.
I had that oh shoot moment.
Trying to get his money out, he called, emailed, reached out on social media.
Hey, sorry, we're not here. We'll give you a call tomorrow. Wait times are really long. Crickets, just no response.
He says Beam blamed everything from the vendor it uses to process transactions to the COVID-19 pandemic.
I just think it's shameful. Just shameful.
Steve Wolf is not alone. We found dozens of complaints from people who say they, too, can't get their money out. Beam's website says it has 186,000 subscribers, though a source close to the company says the number of actual accounts could be less than 30,000. Their deposits, according to a Beam vendor, total some $2.4 million.
The bottom line is this. I don't know where the money is.
We found that Beam is not quite what it seems. The supposed cutting-edge fintech company has its headquarters here at a nondescript building in San Francisco's Mission District, closed when we paid a visit. The 51 member banks listed on the website, we contacted them all, and not one of the 17 that responded said it had a relationship with Beam, which took the names off its website after we began asking questions. So what is Beam? Our investigation found the company revolves around what's known as a sweep account, which is perfectly legal. Each day, Beam's deposits are swept into FDIC-insured bank accounts. A company like Beam can earn interest or fees on those bank deposits and pass that on to its customers. Though it's not clear how Beam could manage to pay interest, in some cases dozens of times that of a traditional bank account. And that FDIC insurance, it may protect the customer if the bank fails, but not apparently if Beam fails, since, by its own admission, Beam is not a bank.
At this point, you got to just assume the worst.
Now, with stories like Wolf's piling up, the company that handles Beam's sweep account, New York-based R&T, says it's cutting Beam off at the end of this week, according to this letter obtained by CNBC. The vendor that processes Beam's transactions, which Beam blamed in those messages to customers, tells us it's cut ties as well after learning people weren't getting their money. The FDIC says it wants answers about Beam's claims regarding insurance. And we've learned the Federal Trade Commission is investigating what it calls possible deceptive or unfair practices by the company.
Now, last night we did receive a statement from a Beam spokesperson saying that the company's top priority has been, without exception, the customer. The statement says that the service was interrupted briefly earlier this month by fraud on the part of certain customers, fraud by certain customers, but it doesn't give much detail on what that fraud was. And of course, that doesn't explain some of the earlier complaints, things that happened before this month, and the fact that the FTC has been investigating since May. The statement is also at odds, of course, with some of the explanations that Beam has given in the past. Now, Beam does say that it is working now to process the most time-sensitive transactions, and that all of the transactions, it said, should be accomplished, should be completed by the end of this week. We'll keep you posted on that. And we've also learned that Beam has sent an email to customers saying that the money is secure in FDIC insured accounts.
Shepard Smith here. Thanks for watching CNBC on YouTube.